All right. Well, hello there, everyone. Hopefully this finds you doing outstanding. This is Mazske Finance coming to you once again on Tuesday, May the 31st, year 2022. And guess what? Our favorite guest, one of our favorite guests, is back with us today. And you know what? I hate to say this, but this may be the last time he comes to my channel because he just completely disagrees with me right now with what he's about to say. So I don't know. Me and Mike are friends, but I don't know. You tell me. Should I ban him from my channel? So anyway, Mike, with that being said, go right ahead.
How's it going, guys? And for those of you on Mark's channel who are a fan of me, please leave a comment down below and let me know who you think is right. The correct answer is me. What Mark and I are going to do here today is we're going to have a debate. We are going to debate whether or not we are having a housing crash in prices, yes or no. I am going to throw all the stats data that I can think of and muster all the arguments that you're reading about and hearing about at Mark and tell him the economy's crashing, the housing market's crashing, prices have to fall. And Mark's going to say, no, they're not. And he's going to give his reasons. So I'm going to start us off with this debate by reading to you from an article here. This is on fortune.com. So Moody's financial intelligence firm rates that 96% of the nation's largest 392 housing markets are overvalued relative to what local incomes can support. That includes 149 housing markets that are overvalued by at least 25%. So to start this debate off, I would say, Mark, if 96% of the 392 largest housing markets are overvalued and 149 of them are overvalued by 25% or more, and folks cannot afford to buy a house, the large majority of people, the affordability index says that people can't afford to buy houses. The only thing that can happen is for housing prices to fall, maybe not fall enough that it would be a crash, but at least a decent amount of them have to fall 25% just to be considered affordable. If the only option is for these houses to fall in value, in my opinion, the only option is for the houses to fall in value so that people can actually start buying again. And that's why I think a crash is coming. You can't sustain these prices if nobody can buy them. Mark, what's your rebuttal?
Well, Mike, I think you just convinced me, so we're going to stop this recording. Actually, well, let's think about this, all right, because you are a friend of mine, so I don't want to argue with you too much, but we'll debate it in a nice way. What about the fact, and I'm not like you, I don't need to refer to some website because I got it all up here, okay? So I thought you were a smart guy, but maybe you're not as smart as us. But anyway, but with that being said, I look at it this way. And I may get my numbers off just a little bit, but we have a certain amount of houses for sale right now, but the amount of folks trying to buy the houses are like double or more than the houses that we have available. And what it means is there's not enough houses for society. We are lacking in affordable housing for the masses. We are lacking just in houses for everybody. So as long as it's a supply demand issue. As long as the supply is limited with a strong demand, it's basic economics. Did you ever take economics, Mike?
Yes, I did.
It's basic economics. If you decrease the supply and increase demand, what happens? Prices go up. So there you have it.
So, okay, so Mark, I understand what you're saying. That is a supply demand issue, and the supply demand curves are undefeated. It's one of the reasons why we have such crazy inflation right now, because we just pumped monetary supply into the system for years on end, gave people purchasing power, and that just increased demand like crazy while holding steady with supply. So supply demand curve undefeated. But here's the concern. You're right. Supply is constricted, supply is limited. There's things that are factoring into the supply being restricted and limited. Not only in most decades over the last 60 years do 20 million houses on average get built in our country. Between the year 2010 and 2020, only 5 million houses were built. It's a 75% reduction. Why? Coming out of the Great Recession, we just had a lot of builders that were out of business, and we had a lot of homeowners who were, and buyers who were scared to purchase real estate. So there was a serious supply crunch in the last 10 years, which is exacerbating our current condition. But you're right. If the supply is holding steady or worse, falling, and demand stays consistent, then prices will have to go up. But here's my counter argument. Demand is getting obliterated. And here's the reason why. Interest rates are going through the roof. Your $500,000 house with a 3% interest rate, let's just say it had a $2,500 payment. These are guesstimate numbers, $2,500 payment. That same $500,000 house with a 6% interest rate now has a $3,500 or $4,000 a month payment. And so even though you're saying supply is constricted, which I agree with you on, I would say unilaterally, nationwide demand is being stomped out so fast, people cannot afford it. So if back to your very basic economics lesson, supply and demand, supply is being constricted, is demand being crushed even faster, at the same rate, or slower? Because I think that's what will affect prices having to come down. And I think based on how fast rates have been raised, how quickly they are going to continue to be raised, we are going to nearly annihilate all of the homeowners and home buyers at the current price points. And then supply will hold somewhat consistent, and that would be what causes prices to come down. Mark, tell me where I'm wrong.
All right. Well, once again, you do make some good points. So maybe I'll stop chatting now, but I'll keep going. So, well, one thing is, and I think you'll agree with this, like that article you referenced, I think he said something like 396 markets around the US. The US is a big country. I live in South Florida. You live on the West Coast, up in the Seattle area. But if we take the expensive markets, Seattle, San Francisco, New York, Boston, what has happened to the populations there? People are moving. Where are they moving? They're moving to the area they think they'll like better. And I live in one of those areas, and folks are still moving here. And when I talk to the local realtors, they tell me, yes, transactions are dropping. And instead of having 25 offers in 24 hours on a house that goes on the market, maybe we're just getting 4 or 5 offers on that house that's going on the market. But the offer normally gets accepted within those 24 hours. And also, instead of prices getting bid up by $50,000 or $100,000, which was happening where I'm at, whatever the asking price is, offers are coming in right at that price or just a little above or maybe just a little below. But there's none of this. There's no houses that's just lingering, sitting there, not getting sold unless it's a problem house. And I think that's what we'll see in a lot of the popular markets is you'll see the same thing. And what my guess from my perspective, and I'm just mazske, I don't know what I'm talking about. My guess is we're going to see prices stop that crazy appreciation and level off. And in some areas, they may pull back slightly. In some areas, they may rise slightly. But I think because of that increased demand in certain markets, that the prices will stay higher. And if they stay higher where I'm at, and in Texas and in Arizona and some other places, are we going to have a crash in Seattle? Are we going to have a crash in San Francisco? Are we going to have a crash in New York or Boston? I don't think we will. I don't think there'll be a crash. There may be a slight pullback, but I just don't see that crash. Does that make any sense?
It does, but I think where people would disagree with you, what I'm going to highlight is you're talking about very unique markets, the hottest real estate markets in the country. Sure, in Florida, sure, in San Francisco, Seattle, Manhattan. Are we going to see a crash? Probably not. But what about everywhere else? Now, you and I both invest in Gary, Indiana. And in Gary, Indiana, I've seen multiple price reductions. As far back as 6 months ago, I closed on my 6th rental property in November of 2021. This was before interest rates skyrocketed. This was before we had the record inflation in 50 years. And a house was listed for 76, then dropped to 73. I offered 68, got it under contract for 70. Now you may say, well, that's only a $6,000 reduction in the original price. Well, that's $6,000 on a $70,000 house. I mean, that's like an 8% reduction in the value of the home from when they listed it to only a few weeks later when my offer was accepted. This didn't sit for months on end. This was like 3 weeks on the market. And so I think you're right. But you did say something that's interesting. All of these agents said, we're getting 25 offers in a day. Now we're getting 1 or 2. Well, that goes to my point of serious demand destruction. If you can take 25 and reduce that to 2, that's like a 90% reduction or more in the amount of buyers that are now looking at things and making offers. We have wiped out a serious amount of the demand for these houses. And maybe in the market you're at, and in the market that I'm at in Seattle, sure, there's still enough all cash buyers and high dollar players that can still come in and buy these properties. But I think all across the rest of the nation, of these 390 biggest markets, well, okay, well, wipe out the top 90. What about the other 300 that are below that top? I think those ones are going to see some destruction in their prices because there's no other alternative. If someone wants to sell, then they're going to have to drop their prices. And this is the last point I'll make for you to go ahead and sum it up for us. Supply is, sellers are experiencing FOMO. They've seen the top of the market. They know what their neighbors got. They know what their buddy across the street got. They know what the guys they go play pool with on the weekends got for their houses. And they've been kicking around the idea, maybe we could sell, maybe we could upgrade, maybe we want to move, we want to go somewhere else. And they're saying to themselves, uh-oh, interest rates are going through the roof. It's going to be harder for me to buy. I know my house is worth an all-time high. I should cash out now. And I think that FOMO, that fear of missing out, is going to affect the psychology of the consumer, the psychology of the seller in this case, and people are going to rush to list their houses. And if we see that, most of your argument has hinged on supply being constrained or holding steady. If sellers get the fear of missing out, supply will probably go up. And if demand holds steady, that will be a decrease in prices. But if supply goes up and demand goes down, once again, supply and demand is undefeated. Your words and mine. I think prices have to fall. All right, Mark, tell me where I'm wrong and let's finish this up.
All right, Mike. Well, if anyone is still listening to this video, I'm going to share a secret. Mike and I don't know what's going to happen. We can both. I could have taken the side of the argument that he just took. He could have taken the side of the argument that I just gave. But both sides have some validity to them. It is a supply-demand issue. Buyers are dropping. Sellers do have that FOMO, fear of missing out. Some prices, like Mike, your example, that house at 8% drop, that's a drop. But I can also counter that with, I bought a house, I think it was in March of this year, early March, 2 months ago, maybe 3 months, almost 3 months ago, in Gary, Indiana, that was listed on the MLS for $39,000, might have been $39,900. And I bought it for $45,000. So I paid more than asking price. Why did I do that? Because $39,000 was a killer deal. And I was like, I can't believe someone's putting this house at $39,000. And neither could the other 8 offers that came in, because everyone started coming in at 40, 41, 42. And I just happened to put an escalation clause in mind that I would go $500 above the highest offer. And I got the house at $45,000. That's just, I don't know what that point is, but that's just a point. The one point is, though, that we as investors, my guess is the majority of people that watch this channel are investors. And if you're an investor, that window of better deals is starting to open, not just in Gary, Indiana, not just Northwest Indiana, but all over the country. Even in my expensive part of Florida, if I was interested in buying a great deal here, it's easier now to find one than it was 9 months ago. And I dare say it's like that in various markets, perhaps 396 markets around the country. The deals might not appear to be out there at first glance, but if you're an investor and you start making lowball offers, you're going to break through and get a good deal, a great deal. Something's going to happen because something will give for us investors. For the homeowner, I don't know. It's market selective. I don't know if we will see price drops or not. Where I'm at, I don't think we will. Some areas may see a slight pullback, but I just don't know. But as investors, that opportunity is coming, and we all have to be poised to take advantage of it. So I don't know. Any thoughts on that, Mike?
I agree with you, Mark. I do think it highlights a little bit more of the point that I was making. And again, like Mark said, we literally just flipped a coin as to who was going to take what side of the argument. I agree with Mark. Neither one of us knows. Nobody knows at all. So if they're telling you definitively what's going to happen, they're lying to you. You know, maybe they get it right. They got a 50-50 shot. Who knows? But at the end of the day, yes, I think that the market's softening. You may get a low ball offer accepted. That leads to my point of saying that I think prices are going to fall, because as people feel it and fear that prices are going to fall, they're more willing to accept that list price offer or come down a little bit. And that does mean that you, as an investor, this is your opportunity, your chance to get in and get a good value and get a good deal, a good or great deal, and not have to be as competitive as you were before. So please be looking at your market daily and be making competitive offers. Find an agent who will write low ball offers for you. If you're a homeowner, I'm sorry, this sucks. This is not fun for you. It's going to be very hard for you to afford a house, and that's just the reality of it. And you may have to sit by on the sidelines like many people did in 2009, 10, 11, and 12. But my advice to you would be, don't be afraid, because there were so many people who had an opportunity to buy in 2012, 13, 14, 15, 16, and they didn't, because they thought either that still real estate was a bad deal, the recession, it just had recency bias, oh, real estate could crash again, or they watched growth between 2012 and 2016 and said, oh no, it's going to happen again, it's overinflating, I shouldn't buy now, I should wait for it to crash. Well, then you missed all the growth from 2012 to 2022. So if you're a homeowner and an investor, recognize what's happening, don't be afraid of it, figure out the game, the rules of the game, and then be the best player of the game that you can be. I'm a student of the game. So it makes me the real estate G. Mark, I'm done. What do you got?
All right. It sounds good, Mike. And like I said, we could have flipped a coin. You know, I could have taken your side. You could have taken my side, because we're friends. And for the audience, if you're still watching, Mike will never be banned from my channel. So
Good.
That is good. All right. So I guess this has gotten long enough. So we're going to wrap this up. So once again, as always, Millennial Mike, if you haven't yet checked this channel out, if you're one of the minority that hasn't checked Mike's channel out, make sure to search Millennial Mike. You'll find his channel. All right. So with that being said, it's the last day in May. Make sure you total up your net worth, and make sure you tune in for more great content from this channel and from Millennial Mike's channel. So you all have a great day. Stay safe in all you do. And Mazske is signing out.